Economic conditions are getting worse for Korea, with not only the U.S. China trade war influencing on the nation's economy, but also its own trade dispute with Japan that is yet to see a satisfactory conclusion. And this, of course, on top of a slowing global economy. Domestic conditions aren't looking much better, with falling investments and consumption. According to Bloomberg, major economic institutions' average growth forecast for Korea this year fell to 1.9%. Today, we go in depth on the mounting economic challenges Korea faces and necessary measures with Dean of KDI School of Public Policy and Management, Dr. Jongil. Welcome to the program.
Thank you.
The Korea Development Institute, better known as KDI, is one of Korea's major state-run economic think tanks. Could you first tell us more about KDI or KDI School?
Well, KDI is the leading think tank in Korea that helps the government in policy formulation and implementation. And I do think that most people actually know about KDI, but not many people know about KDI School of Public Policy and Management, of which I am the dean. So let me just tell you a little bit. Capitalizing on KDI's accumulated knowledge and experience in policy research and development consulting, KDI established KDI School, which is a graduate school in policy studies in 1997, 22 years ago. And we offer bachelor's degree and PhD degree programs in three areas: public policy, public management, and development policy. KDI School is one of a kind in Korea because English is the medium of instruction and it's the official language in everything. And our student body, therefore, is truly international. And we educated more than 3,000 Korean students, but also international students include more than 2,200 coming from 136 countries so far. So some people say it's a microcosm of the United Nations. And our alumni are playing really important key roles, some of them very high-ranking positions in all over the world.
Well, it certainly sounds very impressive, and it sounds like a very coveted graduate school in Korea. Now, breaking down Korea's economy, Korea's exports fell for the 10th consecutive month, and the trend is likely to continue for a while. And this, of course, can't be good news, as we all know that Korea depends heavily on exports for its economic growth. How is KDI observing the current status of the Korean economy?
Well, nobody in Korea now thinks that the economy is doing well. We all know that. There are actually some signs of improvements in consumption demand, but exports and investments continue to slide quite steeply. And that means the overall economic activities are stagnating, and a lot of people are experiencing economic difficulties. And the government knows this, I believe, and that is why it's actively seeking to stimulate the economy. The biggest problem, of course, is, as you just mentioned, exports. There is a global economic slowdown, and especially trade is slowing down markedly. And especially important for us is the Chinese economy. China being our, by far the greatest market, it's very important what is happening to China, and especially Chinese imports are contracting very seriously. So in these circumstances, it's hard, not to be affected seriously by those trends. As an open economy that is highly dependent on trade, the outlook is not so good for the time being. And that is why it's important that the government responds to these adverse external conditions with correct policy responses.
We will get to the Korean government's policy responses later on. But first, we're coming across the term deflation quite often these days in news in the wake of Korea's record low consumer prices. In fact, the consumer price index in September fell below zero for the first time since Korea started collecting data. How do you see this?
Well, a deflation means a sustained decrease in price level, general price level. And as you mentioned, it was a bit of a shock that we actually saw a negative number in consumer prices. But the alarm bells about the possibility of a deflation is a bit overblown, seems to me, because the major reasons for this decline in the consumer prices in September was really one-time, special events. There are two important factors. One is the what we call the base effect, because last year in September we had a very large increase in agricultural prices, and as a result, this year, agricultural prices decreased substantially relative to the prices a year ago. So that was one factor. Another factor was a drop in the prices of public services, and that was due to the expansion of free education for high school students. This is, again, a one-time event, so we don't expect a continuous decline in consumer prices. However, there is a concern, and so we have to watch out for the possibility of a deflation in the future if the shortfalls in aggregate demand, the slowing down of the economy continues, and there is something called core inflation as opposed to headline inflation. That means inflation rate after removing agricultural prices and energy prices, which are often quite fluctuating. So if you look at the core inflation, you can determine the trend of inflation rates better, and in terms of core inflation, it was only 0.5% in September, which is down from the previous month, and this is not a good sign. So we have to watch out for that.
So we don't have to be too concerned about deflation just yet, but there are signs we do need
Sure.
to watch out for. Now, the average growth forecast for Korea this year is 1.9%, reportedly. It's quite shocking to see the figure fall below 2%.
Yeah, Koreans are used to
Right, right.
Much bigger numbers in terms of growth rates. We do not know yet if the growth rate this year is going to overshoot or undershoot 2%, but it looks very likely that the growth rate is going to be the lowest since 2009, right after the global financial crisis, which was 0.8% then. Well, is this shocking? Well, it's unpleasant, I would say, but it's not really shocking because I mentioned there is a global slowdown going on, and growth forecasts are being slashed down all over the world. The United States, Europe, Japan, China, and even India, growth forecasts are being substantially adjusted downward, and Korea is just no exception. Of course, it doesn't mean that we have to accept below 2% growth rates as inevitable. And once again, that is why government policy is important.
As possible countermeasures, the IMF and the OECD are recommending a fiscal expansion to Korea, and the Korean government has also stressed the importance of a fiscal expansion. Do you think now is the right time to expand the budget?
Absolutely. Better late than never. I have advocated fiscal expansion from much earlier, from the beginning of this month. Actually, personally, I was recommending it from the second half of last year, because from then on, it was clear to me that as a result of decline in exports and investments, if we cannot export, firms would be reluctant to, understandable, right? Reluctant to invest. And as a result of that, the aggregate demand was going down, and I saw a need to counter this downward trend with fiscal expansion, which is a standard textbook response to this kind of situation, which has been proven to be very effective time and again. And however, the government was a little reluctant to engage in fiscal expansion at first because of the concerns for so-called fiscal soundness, and that is rising government debt. And luckily, the international organizations such as the IMF and OECD continue to urge the Korean government for aggressive expansionary fiscal policy, and their voices are louder than mine. And thankfully, the government has shifted its position and announced, was it in August, a quite bold expansionary fiscal plan for the next few years. It's bold by Korean standards. I would have liked an even bolder plan, but anyway, and by the way, last month there was this Financial Times editorial which praised the Korean government for having adopted expansionary fiscal policy, and at the same time scolding the German government of not being audacious in terms of fiscal policy. So I felt very vindicated.
Now, much attention is drawn to tomorrow's monetary policy meeting at the Bank of Korea, where further rate cut is expected. Now, if that turns out to be the case, the nation's benchmark interest rate will return to 1.25% for the first time since 2017. Mm-hmm. Do you think a rate cut is necessary?
Yes, I do. In fact, central banks around the world are already cutting interest rates, including the Federal Reserve Board of the United States and the European Central Bank, where the policy interest rate is actually below zero, and they cut even that further down. This is again a standard response to shortfalls in aggregate demand and slowdown of the economy. Instead of directly increasing demand by increasing the expenditure of the government, this monetary policy, a cut in interest rates, would encourage the private sector and individuals to spend more. And we have to be somewhat careful because there are pitfalls in cutting interest rates, and that's why some people oppose this policy. There is first the possibility of capital outflows, hot money flowing out of the country in search of higher returns abroad. But as I just mentioned, other countries are cutting interest rates, so there is nowhere to go. It's not a big concern at this moment. Second, one concern is inflation. But as we discussed before, currently our worry is deflation, not inflation. So if monetary expansion leads to higher prices, that is a welcome development, not a cause for concern. Thirdly, possibility of instigating real estate speculation, which has been a big problem for the Korean economy in the past. But this is, at the moment, relatively, a lower priority because we have relatively strong financial regulations such as DSR and LTV that are in place and checking the real estate speculation. So I do support cut in interest rate.
One last question for you. We only have about a minute left. The Moon administration's income-led growth policy is not making much of a progress. What kind of other economic policies or measures do you think are needed from the Korean government?
Well, fiscal expansion and monetary expansion are short-term demand policies, and these are necessary and important. Nonetheless, these policies are not going to solve the structural problems that we have, of which there are many, including the rapid aging of population, the rising income inequalities, wealth inequalities, problems in quality of higher education, efficiency of R&D, rigidities in the labor market and the capital market that hampers speedy restructuring, etc. These problems would have to be dealt with structural reform policies. And I cannot possibly explain all the details given this time, but one last thing that I want to mention is at the most fundamental level, you have to put people at the top priority when considering the reform policies.
Well, tough challenges lie ahead. Thank you so much, Dr. Yu, for your thorough analysis tonight.
Thank you very much.